Welcome back to the Clean Slate podcast, brought to you by clearrank.com.
Great to be here.
Today, we're zeroing in on ThinkCapital. They're a prop trading firm,
That's right.
and we're going to use ClearRank's own Clear Score to really, take a good look.
Yep, give everyone a clear picture of what they offer.
Exactly. So if you're thinking about trading with them, this should hopefully help you out.
So ThinkCapital, they're quite new, actually. Launched around mid-2024.
Pretty recent then.
Yeah. But the really notable thing right off the bat is who's behind them. It's ThinkMarkets.
Okay, and ThinkMarkets, for anyone who maybe doesn't know, they're a pretty established broker.
Oh, yeah, multi-regulated. You've got the FCA in the UK, ASIC in Australia, CySEC, quite a list.
So that backing, it suggests a certain level of seriousness, right? Stability, maybe?
It definitely helps build credibility from day one.
Mm-hmm.
And what they're putting forward looks attractive, too, funding up to $1.5 million, potentially.
Wow.
And profit splits that can reach 90%.
90% is high. That's definitely catching the eye.
It is.
Now, one thing you mentioned in the Clear evaluation was their drawdown approach, balance-based.
Yes, balance-based drawdowns.
Can you maybe explain why that's, different or potentially appealing compared to, say, trailing drawdowns?
Sure. So, unlike some trailing drawdowns that follow your highest equity point, a balance-based one is, based on your starting balance or your balance at reset.
Okay.
It gives you a fixed floor. So traders might find that a bit clearer, maybe less stressful than watching a trailing limit creep up with profits. Gives a bit more breathing room sometimes during the day.
Right, a bit more predictability, perhaps.
Exactly, as long as your actual balance stays above that set level.
Got it. And they don't just have one way to get funded, do they? There are different challenge types.
That's right. They've got three main paths. There's the lightning, which is just one step.
The fast track, maybe?
Sort of, yeah. Then the dual, that's a two-phase challenge. And finally, the nexus, which involves three steps.
Okay, so options depending on how you like to approach evaluations.
Seems like it, catering to different preferences for speed and complexity.
Let's dig into those a little. The Lightning 1 phase, you said. What are the targets and limits there?
Okay, so lightning, one phase, you need a 10% profit. But the key thing here is a drawdown. It's a 6% trailing max loss.
Ah, trailing on that one.
Yes. And there's also a 3% daily loss limit.
Okay. How does that stack up against the dual challenge?
The dual's two phases. Phase 1 needs 8% profit, phase 2 needs 5%. And here the max drawdown is 8%, but it's fixed.
Fixed. Okay. That's a key difference.
Big difference. And the daily loss for dual is 4%.
In the third one, Nexus?
Nexus is three phases. Targets are 7%, then 6%, then 5%. The max drawdown is fixed again at 6%.
Lower max drawdown, but fixed.
Right. And the daily loss limit on Nexus is 3%, same as Lightning. So you can see the trade-offs, different targets, different drawdown types and limits.
Makes sense. What about the entry cost? Say for a typical $100,000 account.
For a $100 K account, both the Lightning and the dual cost $499. The Nexus, the three-step one, is a bit cheaper at $349.
Interesting. And the profit split starts at?
They all start at 80%, but there's potential to scale to 90%.
And time limits. Do you have to rush through these?
No, that's a big plus. No time limits on any of the challenges.
That takes some pressure off, for sure. And I think I read the fee gets refunded if you pass.
Yes, that's standard across them. Pass the challenge, get your initial fee back, which is, a great incentive.
Definitely lowers the barrier for successful traders. But that trailing drawdown on the Lightning, that's something people need to be aware of.
Absolutely. It requires a different kind of risk management compared to a fixed drawdown. As your balance goes up, your stop-out level also moves up.
Right. It protects profits, but can also cut a good run short if you have a pullback.
Precisely. Needs careful handling.
Okay, let's look at the overall Clear score. It came in at 4.6 out of 5. Pretty strong.
Very solid score, yes.
And reputation was particularly high, 4.8. We talked about the ThinkMarkets backing, which obviously helps. What else boosted that score?
Well, alongside the credibility from ThinkMarkets regulation, our verified feedback tool has been picking up quite positive early comments from traders.
Ah, so actual user feedback is good so far.
Seems to be yes. People's initial experiences seem to align with what ThinkCapital is promising. Adds another layer of confidence.
Good to hear. Now, account types and fees scored 4.5. We've touched on the variety, the pricing, no time limits. What held it back slightly from, say, a 4.8 like reputation?
It mainly came down to a couple of things. First, some of the desirable features require paid add-ons.
Like what?
Things like getting weekly payouts instead of biweekly, or being able to trade through major news events without restrictions. those cost extra.
Okay, so the base package is competitive, but customization adds up.
Potentially, yeah. And the other point was the daily loss limits, particularly the 3% on Lightning and Nexus, which are relatively tight.
Right, requires discipline. Okay, trading conditions also got a 4.5. Sounds like a good environment overall. Raw spreads.
Yeah, the environment seems solid. Access to raw spreads, often down near 0 pips on major pairs, is a big plus.
What about commissions?
Commissions are around $7 to $8 per round lot, which is pretty standard for that kind of spread. And again, no time pressure on challenge is great for trading conditions.
But there were some slight drawbacks mentioned.
The main ones were the leverage on the Lightning account. It's capped at 1.30 for Forex, which is lower than the other two.
What is it on the Dual and Nexus?
Dual Nexus offer up to 1.60 on Forex.
Okay, so double.
And that 3% daily loss limit we mentioned on Lightning and Nexus needs careful attention.
Understood. And what about holding trades over the weekend or using EAs?
Weekend holding is generally allowed, which is good.
Yeah.
News trading, as I mentioned, is restricted by default. You need an add-on to trade through major releases.
And automated trading. Robots.
EAs, yeah, they are allowed on the MT5 platform. But depending on the account phase, you might again need an add-on for full EA functionality. Non-US clients get MT5.
Right. Speaking of platforms, that scored, well, 4.7. MT5, ThinkTrader, and TradingView integration. That's quite comprehensive.
It really is. Offering multiple platforms is a big advantage, caters to different styles. MT5 for non-US, as we said.
And US clients use.
US clients get ThinkTrader, which is ThinkMarkets' proprietary platform. And the big one for many is the direct TradingView integration.
Being able to trade right off TradingView charts is huge for a lot of people.
Definitely a major convenience. And our clear execution tracker showed good performance too. Low latency, minimal slippage, reported on both MT5 and ThinkTrader.
Likely benefiting from that ThinkMarkets infrastructure again.
Almost certainly.
Okay, payout process, 4.6. High score there too.
Oh.
Fast payouts, high split.
Yeah, the payouts look good. The standard 80% split going up to 90% with scaling or an add-on is very competitive.
How often can you get paid?
Typically, it's biweekly,
Right.
but there's that option for weekly payouts, likely with the add-on fee.
And how do they actually send the money?
Right now, it's crypto only for payouts,
Yeah.
Bitcoin, USDT, etc.
Okay. That might be a sticking point for some.
It could be, but they have mentioned plans to add direct transfers to personal brokerage accounts soon, which would be a big improvement for accessibility.
That would definitely help. And they have a scaling plan.
Yes, they do.
Yeah.
If you're consistently profitable and making withdrawals, you can get a 20% increase in your account size every 3 months.
Okay. Decent potential for growth there.
Adds a nice long-term incentive.
Lastly, customer support came in at 4.4. Sounds decent, but maybe not perfect.
Pretty much. They offer live chat and email support, and reports suggest they're generally responsive.
Any community aspect.
Yeah, they have an active Discord server, which is quite common now, and they offer multilingual support.
So what's missing? Phone support.
No phone support. That's the main thing holding the score back slightly. But honestly, many prop firms don't offer it, and their other channels seem effective.
Right. So based on the direct feedback we collected, the verified feedback, what did traders actually like and dislike most?
Okay, on the love list, weekly payouts, even if it's an add-on, people like the option. No bans on specific trading strategies. The fact they accept traders globally includes the U.S.
That U.S. availability is key for many.
Huge. Also, positive comments on the experienced team behind the firm, and people seem to like the ThinkTrader platform.
And on the hated side, or maybe disliked?
The fees for those add-ons came up quite a bit. Also, the scaling plan requirements needing a 10% profit every quarter to scale was seen as a bit challenging by some.
A high bar to consistently hit.
It can be. And there was one isolated mention of a problem with how an account closure was handled, but it seemed like a one-off issue.
Okay, and quickly, the website audit. What does their online footprint look like? Still early days?
Yeah, still looks like early stages, but growing. Domain rating around 27, URL rating 22. They've gathered over 1,500 backlinks from nearly 300 domains, which isn't bad.
And traffic.
Organic traffic is still low, maybe a few hundred visits a month, ranking for around 400 keywords. But the top country driving that traffic is the U.S.
So they're definitely targeting that market and starting to build visibility.
Looks that way, yes. Building from the ground up.
All right, so let's wrap this up using our clear framework. Key takeaways for ThinkCapital.
Okay, C, credibility. Strong, mainly thanks to that ThinkMarkets backing and regulation.
L, leverage. It varies, up to 1.60 on some, but more restricted at 1.30 on the Lightning Challenge. Something to watch.
E, execution. Seems very solid. Institutional grade, likely leveraging ThinkMarkets tech, low latency, good reports.
A, accessibility. This is a strong point. Multiple challenge types, global access including the US, choice of good platforms like MT5, ThinkTrader, and TradingView.
And our regulation, indirectly strong. While ThinkCapital itself isn't regulated like a broker, it operates under the umbrella of the heavily regulated ThinkMarkets.
So putting it all together, ThinkCapital looks like a pretty compelling option in the prop space, wouldn't you say? Especially with that broker link.
I'd agree. It presents a strong case. The main things for traders to weigh up are those potential add-on costs. Do you need them? Understanding the specific drawdown rules for the challenge you pick, fixed versus trailing, makes a difference. And, for now at least, being okay with crypto payouts.
But the platform choice, especially TradingView, that's a definite plus.
Huge plus for many traders today.
So, as always, we recommend you check out the full details on clearrank.com. See all the data, read the feedback, and figure out if ThinkCapital fits your specific needs and trading style.
Definitely do your own homework based on these points.
Well, that brings us to the end of this review. Thanks for joining us on the Clean Slate podcast.
Thank you.